Well, joining us today
This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
To catch up on, but first of all, of course, announced recently this 3 million accelerated book build here. So I mean, just a couple of, well, there's a few things to ask really on this, but I mean, first of all, one thing that was quite noticeable was that you were sort of, if you like, putting out the offer to shareholders to participate in this accelerated book build by contacting First Equity. So, I mean, could you just explain sort of how this is all working? Because I've not really seen this before, where a company says they're announcing and also at the same time says, please, if you'd like to take part, do this.
So we're in an incredibly privileged and fortunate position thanks to the backing we have of Purebond. There are 52% shareholder. They've given us all the support that a company like ours could ever have dreamed of. And as we went on record last year when Purebond came onto our shareholder registers to this extent, we said at the time that we wouldn't do any more discounted placings. We would let the market determine our price, and that's what we've done with this deal today. But Bullo also went on record, Mark, when you interviewed him last summer, and said that other shareholders, that Purebond's view was to hopefully other shareholders would come along for the ride. So we structured this deal, which means the company gets guaranteed access to the funds. That's obviously most important in terms of delivering our plans. But we've also been able to do it in a way that existing shareholders are able to participate to be able to manage their dilution. So, for example, Peter Winterby is coming in for a number of shares, and he's actually going to be taking a slightly larger proportional holding in the company. I'm also participating in the deal as well as a shareholder, following my money and managing my dilution. So I think for a business like ours, we've had a lot of success recently. We're very excited about forthcoming results as well. But one of the things about success in this space, Mark, is it's expensive. It requires more financing. It's not like drilling an oil well where if you hit, you can bring something like that straight into production. Exploring for mineral wealth in the Earth's crust is a much more expensive business. And we've now got some fantastic leads in Zimbabwe that we're looking to move into and to see whether or not we have actually found mineable ore deposits. But to do that requires more drilling, and that's what the finance is for. So anybody investing in a successful, fast-moving exploration company, they do need to think how they're going to manage their dilution, which is exactly what Purebond has done. And we've structured this deal to enable our shareholders to do precisely that.
Excellent. Well, that's very good because, of course, one of the pet hates, if you like, of investors is the sort of that word, that dilution word, but it is inevitable in a mining and exploration company. You have to raise funds to make these exploration discoveries to hopefully then build value. But it's a good method here to give people that chance to avoid that, if you like, or to manage, as you say, their dilution. So Purebond will be effectively holding the same, will they? They're effectively will be holding the same situation.
Well, exactly. So it all depends on what take-up there is of the remaining balance. So as the RNS said, Purebond's minimum investment is going to be for 52.5% of this deal to make sure they maintain their position. But if it turns out that we don't fill the rest of the book and that other shareholders don't want to participate, then Purebond will take the extra shares. They'll invest and buy the extra shares and increase their proportional holding, which will obviously further tighten our already tight stock and strengthen our position, I believe. So it really is it's a win-win for the company. And I think one of the key concerns that shareholders have in the rest of the market is they feel they get shut out of these deals. And what we've shown today is actually how easy it is to enable your shareholders to participate in a deal like this in a very low cost manner. You don't need to go to the expense of an open offer or anything complex like that takes a lot of management time and costs a lot to put together. There are mechanisms in the market that if you're creative enough, you can open the door for your retail shareholder base to participate.
Yes, indeed. And the directors have taken part as well, have they, Ben? Can you sort of talk to who and how much?
Yeah, so Peter and I, between us, are putting in £225,000. We've made orders of that size. Peter's coming in for 201. So Peter's going to take his stake from about 5.5% up to about 6% now. So he'll be slightly increasing his holding. I'm subscribing for 2 million shares, so that's about £24,000. That means I'll come down ever so slightly in terms of my overall position, but I've participated in every raise so far and bought on market, and I want to follow my money. So I think the period that we have coming up with the company now is very exciting, and I think we're a very good bet.
Okay, good. And indeed, why have you raised now? I'm just thinking too, I think the last raise was double, I think, wasn't it? Around 6 million. So could you perhaps explain why now, why 3 million, and how it will be used?
Yeah, so the last raise was 6 million, but it was done over 2 stages. So the first 1.5 million came in midway through last summer, and then the remaining balance came in November last year. Simple fact is, Mark, we've made a lot of progress in the field. We're a company that puts as much into our projects as we can. We acquired the ENRG ground in the KCB for about £1.25 million. We flew the extensive airborne surveys over for complete KCB holding, which is now leading us towards drill targeting for our 5,000 metre drill campaign that's coming up. And in Zimbabwe, we've really moved at lightning speed. We've taken a drill rig into the country. We've secured our first projects. We've drilled, we're getting on now, I think, for about 3,500 meters, 3 to 3,500 meters in Zim. So all of this obviously costs money. Our financial position is pretty strong still. I mean, we've got about $1 million in cash resources in the bank still. So we've got our current programs are all funded. But based on the success that we've had with our first 2 sets of results, which again, in exploration terms, hitting 2 for 2 on your first 2 exploration holes where it looks like you've discovered potentially mineable deposits. I wouldn't say that's unheard of, but it is certainly very, very rare in this industry. And it underlines the opportunity in Zimbabwe. But the simple reality is that we couldn't plan for that sort of success because it was unpredictable by its very nature. So what we now need to do is we need to bring the drill rig as soon as we finished at Nara, mobilise the drill rig back to Hillside so we can start chasing what we hope ultimately will become significant gold resources at prospects 2 and 4. And
this is, of course, where you intercepted that nearly 10 grams per tonne gold, isn't it, as well? And you also exercised the option very recently as well, which was obviously suggests some fair bit of confidence in this project going forward.
I think our strategy in the Greenstone Belt that we're working in is coming together better than we could have ever hoped. I'm heading back down to Zimbabwe on Wednesday. Peter's coming down this weekend. So we're going to go and look at the progress we've made in the field and look at the expansion opportunities. We're then going to spend a few days in Harare next week, but so far, yeah, I mean, our confidence is extremely high in what we're seeing. So, and that's also why we've raised the money today. We want to show, very clearly to the market that we've got very ambitious plans that we're fully financed for. We've got an extremely strong cornerstone investor behind us who is leaving the door open for our shareholders to participate and come along for the ride. So Kavango, with the team that we've recruited and the improvements we've made to our exploration processes and technologies and techniques, yeah, we are in really great position for what I hope will be an extremely second half of this year.
Yeah, and just picking up on that news from last week there on Zimbabwe at Hillside there, that induced polarization survey identifying anomalies interpreted as gold-bearing shears with this wide deformation zone, suggesting the potential for bulk mineable gold deposits, which is what we've talked about before. That's what you're after here, is that bulk mineable potential open pit gold deposits here. So you want to send the drills back there when you finished at Nara to evaluate this potential here. And then what else? What will you do after that then? I read you want to do a bulk sampling exercise as well?
Yeah, well, exactly, Mark. So we want to come back and test those targets with the drill bit. At the moment, they're very good-looking targets. They're primarily geophysical targets, but that are supported by artisanal workings that sit on top of them, which suggests that we have got gold-bearing structures. Obviously, it's too early for us to be able to talk about widths or grades until we actually test them with drilling. But assuming that all goes to plan and that we put half a dozen holes into Prospect 2 and half a dozen holes into Prospect 4, assuming that those do meet our expectations and they do look like they're open pittable mines, then you're absolutely right. At that point, we then start to move into thinking, how are we actually going to bring these into production? So bulk bulk mining testing will certainly be part of that, metallurgical testing as well. We'll also need to think quite carefully about what kind of drilling we do moving forward. I think one of the things about Zimbabwe is we're not entirely convinced it's going to be worth going through the full feasibility study drilling. That takes a very long time and is very expensive. We think we have deposits that we will be able to bring into production, and it would be much better for the company to focus on actually developing those and starting to get the gold out of the ground. But these are all questions for later down the line once we've hopefully had more success.
Okay, good. Well, it certainly sounds like it's going to be fairly active, Ben. Is that fair to say? Of course, you've got the KCB as well, where you're planning 5,000 meters of diamond core drilling for that copper potential there. So, I mean, can the company and indeed shareholders expect a fairly active British summer run of news from the company?
I would say much more than that, an extremely active British summer run of news from the company, because again, the second area that we're going to be using these funds that we're raising will be to bring a second drill rig into the KCB. Had we used just the single drill rig, which is what we've done in the past, the 5,000 meter campaign probably would have taken around about 8 months. That's assuming no breakdowns and what have you. With 2 rigs on the case, we think we can actually deliver it in 3.5 months. Now that's significant because that saves us at least 4 months worth of overhead and PLC cash burn. But it also saves us December as well. I think, as you know, Mark, December is the equivalent of the summer holidays down in Southern Africa. So if we can get all of our drill core in by the end of the summer, we could have the results from the assay testing by the end of Q3, maybe the start of Q4. Mm-hmm. If we'd gone down the route of having the single rig, we would have also lost, that month, 5-week period over Christmas, which would have delayed results into Q1 next year. So, yeah, with the drilling that we've done at Nara, we've got results to come in from that. Once we start sending off for assay testing and for multi-element testing, we've got the multi-element testing from the hillside cores as well. And we have a few things on the corporate side that we're working on. And of course, last but not least, we've got Kavango Mining. We're going to be able to put some additional capital into Kavango Mining to start to increase production there. That's going to be my primary focus once I'm back in Zim, is to start getting that business unit up to a much more profitable level on much stronger revenues. So yeah, a huge amount of news flow coming because the company really is moving extremely quickly.
And Kavango Mining, Ben, that's the contract mining at Hillside. So you are into small-scale production there, obviously with the bigger goal to get into wider open pit. What's the remit of Kavango Mining? I mean, are you looking for sort of early-term cash flow here? You got any ideas of what that might look like?
Yeah, exactly. So there are 2 elements to our strategy with Kavango Mining. First, as you rightly say, is to build up our small-scale production. So to build on what's already happening in the area, but to capitalise it properly, we think we can deliver quite significant production gains relative to what's being done at the moment, and also increase efficiency. So Kavango Mining, we believe, as we said in the last announcement, will be a profitable business unit in its own right over the course of, for the rest of 2024. We went immediately into production in March. We produced just under 900 grams in our first month, so just under a kilo, which meant the business was already turned a small profit. I'm keen to build on that. More importantly, for our medium-term, much wider strategy, as an exploration company, one of the most challenging things a business can face is if it does actually make a discovery that it tries to bring into production, is making that transition from exploration to mining. They are very, very different business models. So our plan with Kavango Mining is to start fairly small, but to begin to build up our competency as a mining company. It requires completely different management, completely different team, completely different processes, health and safety. They are just very, very different businesses, mining and exploration. So our plan is over the course of 2024 to build up our mining capabilities while our exploration team hopefully finds some larger open pits that we can then transition into Kavango Mining from 2025 onwards.
Okay, good. Well, I think that sums up what you want. I was going to ask you what you want to achieve sort of by the end of the summer, but I think you've summed that up very well. I mean, you've got potentially 2 rigs going there at the KCB, Hillside drilling for further targeting there, and also looking at that bulk sampling to look at the open pit or bulk mining potential there, as well as the ongoing production from Kavango Mining at Hillside, and of course the drilling results from the Nara tailings project. So I guess by the end of the summer you would want to see news from all of these, developed all of those projects a bit further, whilst at the same time getting into some gold sales effectively through Kavango Mining.
Exactly. You summed it up perfectly, Mark.
Great. Okay, well, thank you very much for your time, Ben Turney, the CEO of Kavango Resources.
Thank you for having me.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.